Andrea, Bobkowicz here. One more time, I am in my backyard because we are in COVID land because COVID requires us to stay and work from home. So I am at home, but I am still working. So here we are putting some information together for you to actually try and extract profit in an environment that's very difficult to try and manage higher income. So this is all going to be all about trying to go back 3 years to recapture capital gains taxes onto your 2020 situation. So for example, if you have about 150,000 in capital gains in the last 3 years, 50,000 per year, for example, and this year you have some losses, unfortunately a couple of dogs, maybe in the oil sector, maybe in a couple of marijuana stocks that haven't performed the way you wanted them to. It doesn't matter what sector they're in, but you want to sell and recapture some of the taxes you paid on those gains in past years. This is the year to do it. So here's the plan. You sell some of your dogs in your account this year. Don't worry, don't cry about it. And if you actually really like the stocks, you can buy them back anytime. So what you want to do is take the loss and then go ahead and apply them to past years. So you sell for 50 or 60 or even $100,000 in losses this year. What you're able to do is go back and recoup the taxes you paid in past years. So be sure to talk to your accountant. I do not know your personal situation, so you want to make sure you talk to them. Now, for those of you who are corporations, it has an extra layer of complexity, and you definitely want to talk to your accountant on this one. But something to consider. You may know what CDA is, or capital dividend account. So if you're a corporation and in the last 3 years you've accumulated $150,000 in capital gains, you've been able to build up your capital dividend account. And in doing that, you're able to establish an opportunity to take those funds out. What you want to do is talk to your accountant, strategize. Take the money out or strategize it out either through a loan or literally physically taking the capital out of your capital dividend account so it's at zero. Once it's at zero, then take your losses in your corporate account. Then you could take those losses again, 100,000, 150, try not to go over, and go back over your last 3 years. If you exceed that amount, those losses, both in the individual and the corporate, get carried forward in future years. Now in the personal account, that's a good thing because you can establish that going forward. In a corporation, you really don't want to have capital losses going forward because it prevents you from continuing to build up your capital dividend account. So this is a great way of doing it. Talk to your tax expert, but again, look me up. I'm happy to discuss this with you. These are opportunities for you to build wealth without actually taking too much risk. Andrea, Bobkowicz.